Hi there, Evan here with Crypto and Markets for Friday, May 25th, 2018. I didn't think OPEC would do it. I was wrong. I didn't think OPEC would cave, but they did. I'm here to say, though, it was a lot more than Trump's tweet a month ago that led to this. Again, that got the ball rolling, but it wasn't the only factor here. For that, just know who the second and third biggest oil-consuming nations in the world are. China and India. India, I mentioned on this channel before, their economy is starting to soften. Product demand there, gasoline, diesel, etc. Demand there starting to slow as well from a weakening economy as a result of the weakening rupee. Even it came out last night our time that the government there agreed to cut the gas prices. Again, further indication that all the pressures there from the weakening rupee are starting to hurt the consumer. And then there's China, where most of China's oil demand has come from hasn't been from products. It's been from them buying to fill up their SPRs. And if you notice, why did Iran and Russia, why are they both saying we prefer Brent at $60 a barrel? Because that's where their biggest buyer, China, preferably wants the price to be so they can go ahead and keep buying the oil, keep filling their SPR. So again, it wasn't just the US. It was the top 3 oil-consuming nations combined. So again, there's that part. And there was all those political pressures again that all added up and led to where we are today. Now again, the bulls on Twitter, they kept mentioning this today. Oh, how they saw the market reaction and they're going to go ahead and reverse course. So you're going to reverse course against what the top 3 oil-consuming nations in the world asked you to do. In a geopolitics, reversing course like that would be absolute suicide. Okay? So it's a non-starter. Now what does all this mean? The market seriously listened today. So now we go from a supply-demand dynamic that's balanced at best. Now it goes back into a glut. And again, all this is happening in a slowing economy. That's the significance here. Now, if you want it more in number terms, there's a couple of tweets I did on this this morning. I'll link those down below. You can read them for yourself. Now, for the key levels to watch. On the weekly chart for crude, for WTI at least, which is the West Texas crude, on the weekly chart, there's a big uptrend that started around about late June that's kept going about until now, which lies at around $65.5, $66 right now. That's a key area to watch, at least in the short term. And then on the monthly chart for WTI, there's been an uptrend in place since the market bottomed back in February 2016. That uptrend right now is at around $55 or $56. And that's my medium-term target. So short-term, weekly uptrend since June, 65.5, 66 is the level to watch. Medium-term, uptrend in the monthly from 2016, watch 55 to 56. So at the end of the day, I'll admit I got it wrong. I didn't see it coming. But the oil market dynamics seriously changed today. hit the like button, leave a comment down below, subscribe, and follow me on Twitter at CryptoMarkets2. I'm about to grab some dinner. Good night.